Hey guys, welcome to the Silver Report Uncut. I wanted to talk about what's going on with the central banks. It's insane right now because these same entities are telling you that it's not a good idea to own gold. And they've been amassing near record amounts, the most amount since back when the US currency was backed by gold 55 years ago. According to the World Gold Council, central banks purchased a record 399 tons worth of gold, around $20 billion in the third quarter of 2022. This brought the global demand for the precious metal back to the pre-New World eat the bugs, you will own nothing levels. Now, by the way, I wanted to pause for a second. Just so you know, we are listener supported, so if you wanted to help out the channel, putting the ship right back up where it belongs, consider supporting us. Check down in the description. We have a couple ways you can do that to help us keeping things going. So retail demand from jewelers or purchasers of gold bars or coins, it was also high. According to the World Gold Council, global gold demand, it rose 1,181 tons in September. This represented a 28% year-on-year increase. According to the World Gold Council, the central banks of Turkey, Uzbekistan, Qatar, and India, they were among the greatest importers of gold. However, other central banks, they purchased significant amounts of gold as well, but they did not officially reveal their purchases. The Central Bank of Turkey is the year's highest reported gold buyer and also the number one currency destroyer that we have on our map. They bought 31 tons in the third quarter to increase their total gold holdings to 489 tons. The Central Bank of Uzbekistan, they purchased another 26 tons. The Central Bank of Qatar, they purchased 15 tons. And the Reserve Bank of India purchased 17 tons during the quarter, increasing their gold holdings to up to 785 tons. The retail purchases of gold bars and coins in Turkey, they increased by more than 300% year-on-year to 46.8 tons in the third quarter alone. Now this, of course, is the country that was adding taxes, making it more difficult to buy gold and silver. They didn't want their citizens to own gold. They told them to trust in the currency. They were banning foreign currencies. But lo and behold, the same entities that wanted to stop the people are buying the gold themselves. And they need to. How are they going to be able to interact and trade with the rest of the world when they have a currency that's collapsing? These changes, they're not unexpected, however, because gold is still regarded as the premier secure asset in times of uncertainty and instability. Gold is considered an excellent inflation hedge. Experts claim that this is only true over long time periods like decades or centuries, and unfortunately for gold bulls, the increasing interest rates, they ruin the celebration. The exchange-traded funds, or the ETFs, that store metals for investors, they became net sellers during this time period. And also the gold prices fell 8% in the third quarter during the time when the most feverish purchases were taking place. The ETFs, they sold bullion to offset these central bank purchases, and I wonder how much they were involved. Gold is a non-interest-bearing asset. As interest rates rise, investors were seeking to shift their money to better-paying securities. A strong dollar also came in and hammered gold and other commodity prices. The gold prices were down 9.3% year-to-date, and they're about 20% lower than their March record of $2,050 an ounce. Now, this is not entirely bad news. And I want to say this for a reason, is because you don't want to buy a product when it's at a record high. And this is not the end of the record for gold. We've entered a new paradigm. They've totally destroyed the currency. I hear there's new stimulus checks coming out very, very soon. And this is far, far from over. Fortunately for gold enthusiasts, the long-term gold picture, it seems to be very favorable. Gold dealers tend to concur that gold's long-term direction is upward. Despite the increased interest rates, gold prices will return next year, according to a bullion industry study. They said the traders predict the prices will grow to $1,830 an ounce by this time next year, which would be a pretty good rise, roughly 11% more than they are right now. Now, I wanted to cover the comments that came out from Philip Clapwick. He said, "I believe the Fed's hawkishness is substantially in the price. However, the possibility for a near-term significant comeback in gold prices is extremely restricted as interest rates rise and the U.S. currency stays strong." He's the managing director of the Hong Kong-based consultancy Precious Metals Insights Ltd. A declining dollar is expected to enhance the gold outlook, according to Finney. After a lengthy run of relative strength versus other major currencies, the dollar may be losing its appeal. The dollar index, which compares the US dollar to 6 major currencies, it hit a multi-month low. According to Wells Fargo, and their dollars rally, it will likely continue this year as interest rates increases higher. The Fed rate cuts in 2023, they would send currency into a cyclical collapse, in other words, and the dollar is expected to decrease in 2023 when the U.S. enters a recession and the Federal Reserve reduces their interest rates. Now, this should be a little bit alarming for a lot of people. I'm not sure if you heard what was going on with Stripe. If you don't know who Stripe is, they're the ones that handle the payments with the cards. Businesses can buy them. They use them for credit card transactions, things like that, online payments. We use Stripe with the Buy Me a Coffee. That's another way you can support the channel. But with Buy Me a Coffee, they do Stripe. This is one of the world's most valuable startups. They're a big deal. Now, they came out and said they're going to lay off 14% of their entire workforce. It's 1,000 jobs. Now, this is the company that helps small businesses process credit card transactions. How bad must the economy be right now if they're going to be cutting 1,000 jobs, or in other words, 14% of their employees? This will return the headcount to nearly 7,000 total. That's from February. And the company is seeking to cut costs during this recession. And the co-founders, Patrick and John Collison, they shared the news with the rest of the firm in an email, vowing to cut spending more widely as they prepare for the leaner times. They said, quote, "We were much too optimistic about the internet economy's near-term growth in 2022 and 2023. We underestimated both the possibility and severity of a wider downturn." That was in the email. Also, we increased operational expenses much too rapidly. We allowed coordinated costs to rise and operational inefficiencies to creep in, buoyed by the success of several of our new product areas. The Collisons, they said that their personnel cuts will have disproportionate effect on the recruitment industry since the firm planned to employ fewer individuals next year anyway. Staff who leave, they will get at least 14 weeks of severance compensation, and the brothers have promised to pay yearly bonuses and unused paid time off to all employees impacted by the layoffs. Now, speaking of Turkey and their inflation, the lira just hit a record low. Turkey's annual inflation, it soared to a two-decade high of 85%. That's right, their annual inflation, it just hit the highest level in 24 years, worsening this cost of living crisis that the citizens are facing in the country, even as the political opposition parties claim the real numbers are much, much worse than the official figures. The 12-month Consumer Price Index, which measures the inflation on an annual basis, it hit 85.51% in October. This is the 17th consecutive month that the inflation has risen in Turkey. It's up by 3.54% from the previous month. The lowest inflation rate, it was in communication and education. They both rose by over 30%. The transportation sector, they saw the highest annual inflation at 117.15%, followed by food and non-alcoholic beverages at 99.05%. Furnishings and household equipment, it rose 93.63%, and the housing, it increased by 85.17%. They're not alone. Countries all around the world have been doing the exact same thing, and of course the central banks did it. Of course the governments did it. They wanted this money. That's the whole point of a fiat currency and why we should be using gold, so that governments around the world cannot loot the people. Inflation is looting the people. It's stealing the money. It's a tax on the people. When you drop the value of the currency and everyone is holding it, you're pretty much reaching your hand into their pocket and taking their money. That's what they've been doing to us here in the U.S. Hey, I heard reports over there in Texas around El Paso that a dozen eggs is going for $6. $6 a dozen. Who can afford to live there? I thought things were getting pretty expensive around here at the grocery store, but now that I think about it and take a step back, $2 a dozen is not so bad. But, this time before I left and I was in Pennsylvania, the price of a dozen eggs was 69 cents. Things have gotten out of control. Of course they did it. And of course it's not over yet. You think it's going to be over, but these guys are out there, they're planning and preparing for all of these nationwide blackout scenarios where the power goes out for up to a month, 2 months. All of this because of the lack of energy. Thank you guys for stopping by and joining us. As always, stay free.